Hello, my friends. Today is July 20th, and this is Markets Weekly. So, this week I'm on the road here in San Francisco speaking at the Monetarium Conference. Monetarium is a conference put up by the Reserve Protocol, which is a cool new way of issuing asset backed tokens. Very interesting stuff. But since I was on the road, I thought that I would just do this Agent Zion style and use my cell phone. There will be no slides in today's chat. So I think the biggest news in markets the past week was the ascension of J.D. Vance, senator from Ohio, to be Trump's running mate for vice president of the United States of America. Now, this is a really big deal because it significantly increases the probability that going forward, the U.S. could depreciate its currency. Now let's review a little bit though. Now during Trump's first term, Trump was all about trying to make US exports more attractive and creating jobs back home to help the American worker. The way that he was doing this was increasing tariffs on imports from other countries like China. The logic being that if imports become more expensive because of tariffs, then well, maybe companies will instead build in America. Now, the architect behind that plan was Trump's top trade representative, Robert Lighthizer. Recently, just a few months ago, there was a really interesting interview in Politico uh, about Robert Lighthizer, citing that Robert Lighthizer noted that, in the past we used tariffs, but this time around we could also use currency depreciation in our toolbox. So the logic being, we'll put up tariffs, make imports more expensive, and we will depreciate our currency so that our exports become more attractive. Again, the whole goal here is trying to find ways to encourage businesses to build in America, create American jobs, and so forth. This is really standard toolkit that's been used by countries for since the beginning of time. So Trump, this time around, if you look at the betting odds, it's looking like he has a pretty good chance of becoming the next president of the United States. Now, his opponent, President Biden, right now, there's a lot of turmoil in the Democratic Party. There's a lot of pressure for President Biden to step down. President Biden doesn't seem to want to step down. So it's not super clear who the Democratic nominee really will be. And when the final nominee appears, the odds will change, but so far it seems like the markets are pretty confident that there's a very good chance, let's say above 60%, that President Trump will have another term. So President Trump says a whole lot of things. How do we know that he really means it? Well, one way that we know that he might be really serious about a currency devaluation is by picking J.D. Vance. J.D. Vance is the author of Hillbilly Elegy. He's someone who has built his political career basically being a champion of the American worker. And that is look at that as well. And in addition to that, we have a recording of J.D. Vance and Richard Powell having a discussion on the Senate during the Senate monetary policy hearing, where J.D. Vance basically suggested that maybe having reserve currency is not really in any case, he seems like the kind of person who would be totally open to currency depreciation. So that suggests that there is really, I think, a strong probability that President Trump will want to do this policy. Okay, now that if President Trump wants to do this policy, can he depreciate the currency? Now, I've been seeing that comment in social media, and that really surprises me because depreciating a currency is the easiest thing in the world. Throughout just looking across the world, people have trouble, countries have trouble keeping their currency strong. They don't have any problems keeping their currency weak. That's really the easiest thing in the world. Let me just talk about a few ways this could happen. First off, you should know that the currency policy has been in the purview of the US Treasury, that is to say the White House, since the 1930s when President Roosevelt devalued the dollar against gold. So this is something that is totally within the right of the US president. Now, how they could do it? Well, we can look at what they did last in the 1980s during the Plaza Accord. At that time, the dollar was super strong. Remember, Volcker hiked the rates tremendously. Super high interest rates in the US was making the dollar very strong. And that was creating problems for US exporters. So they all went to the Congress, they went to the White House, they were lobbying. And the government came up with the Plaza Accord, which is a coordinated plan to devalue the dollar. What the government did was basically go to the Japanese, and Japanese at that time were perceived to be the biggest offender, having a currency that was too weak. What they did was they basically said, hey, you will devalue the yen against the dollar, or we will put up tariffs against you. And the Japanese obliged, and the Plaza Accord worked really well. The dollar definitely depreciated meaningfully. So again, easy to do. We could do the same thing. Uh, President Trump go with his trade representatives, go across the world. Remember, the US has a huge consumer economy. It imports a lot of stuff. The US consumers are the clients. Clients have power. They just go and say, hey, if you don't do something about your currency, we're going to put tariffs and it's going to be hard for you to sell into the largest consumer market in the world, at least in dollar terms. So that's one way they can do this. Another way is actually just through sentiment. You know how the Fed just talks about, I think interest rates should be high, I think interest rates should be low, I think I might be cutting rates, and that moves markets. Now, all you really need is for President Trump to just go on Twitter and say, USD JPY at 160, I don't like that. I think a good price is 100. Now, I don't know if that will get USD JPY to 100, but I can tell you it will have a big market impact. Just having a White House make a whole lot of noise, telling the market they want to do this, I think will have an impact. Alternatively, you have other ways of doing a dollar depreciation. It's going to require some more cooperation with other organizations. For example, maybe the Trump could try to lean on the Fed a little bit, try to keep rates lower. That will depreciate the currency. And if the Republicans sweep Congress, what we could do is, and this was suggested by Brad Setzer, we could just have a humongous dollar sovereign wealth fund. So what does that mean? So again, many countries have sovereign wealth funds. The United States does not, hasn't really needed one, still doesn't. But if you wanted to depreciate the dollar, let's say Congress says that we should have $1 trillion sovereign United States wealth fund. Okay, so we would go and we would borrow $1 trillion in the market, issue a bunch of treasuries, again, printing treasuries, depreciates the currency, and then take those dollars and just sell them in the markets, buy euros, buy yen, and that's just we're going to end up with a lot of euros and yen and other foreign currencies, but it's going to depreciate the dollar against other currencies. So this is like something that is totally easy to do. The problem, of course, is that eventually when it gets too weak, and usually historically it does get too weak, how do we make it stronger? That's the hard part. Okay, but depreciating is the easy part. Now, what does that mean for markets? Now, this is actually would be a seismic shift in the markets. Now, remember, as I've been saying before, going forward, what you want to think about when you think about a public policy is to pay more attention on the fiscal side, on Congress, on the executive, less on monetary policy. That stuff is still important, but we know how those guys will behave. So I actually think that if we have a big dollar depreciation, it's going to be very bearish for the market. Now, the thinking, of course, is that, well, cheaper dollars, stocks go up. You can say earnings increase, earnings from overseas increase, and so forth. And that's all true, and maybe that would be true in the long run. But the immediate impact is you have to think about, and this is what I wrote about last week in my blog. There's a lot of good data and charts in that piece if you're interested in looking at the details. But basically, there are a lot of foreigners who own a whole bunch of US dollar assets. And, what are they going to do if uh, the US government is telling them, we are going to depreciate the dollar? Now, over the past year, foreigners buying US dollar assets have been in a really good trade. So the S&P gone to the moon, dollar strengthened, so you're making a double play, making money on the asset and on the currency. But let's say that the government says we're going to depreciate the dollar, then what happens then is that foreigners are hearing that and saying, I'm going to have a guaranteed loss on my dollar investments. I got to do something. Now, I could hedge. So there's a lot of ways to hedge that currency exposure. But right now, with short-term interest rates around 5%, it doesn't make any sense. So what they could begin to do is begin to sell their dollar assets and just bring the money home. And we already have the largest pension fund in Japan, thinking that they're going to sell some foreign currency assets, invest in yen. Obviously, part of that is because interest rates in Japan are higher. Part of that is to support their own currency. But it's something that it makes total sense from a foreign investor perspective. Now, foreigners own tremendous amounts of U.S. assets, especially recently equities. Now, the equity market has appreciated a lot, so because of that, the foreign holdings have appreciated a lot, and they don't hedge equities. So I think that's a sizable risk factor. Again, I think longer term, obviously, cheaper currency, very bullish for U.S. assets. But before we get from here to over there, we have to go through this turmoil where the foreigners have to figure out what they're going to do, and I think that could be negative. It's something to keep in mind. But again, we have 4 months till November. A lot of things could happen, but this is something that should be on your radar. What it could mean for basically markets if we depreciate the currency. All right, so that's all I have for today. If you're interested in hearing my thoughts, check out my latest blog post at bigguy.com, and I'll talk to you guys next week.